There is a reason why I am able to make over $100,000 per month with options trading every single month. And it's because of one incredibly boring but consistent strategy. Now, the best part is this strategy is actually stupid simple. In fact, it's so simple that it works for complete beginners like I was. It simply works. So today, I'm going to explain to you exactly how this strategy, which I call the purist approach, works. And I'll give you the 3 easy steps you need in order to make this work yourself. Then, I'm going to give you 3 examples of trades in which I use this strategy in one single trading session. And if you stay to the end, I'm going to give you one extra special example in which I use this strategy in an incredibly unique location that made me over $11,000 in one trade. Now, for those who don't know me, I'm Ryan. And just a few years ago, I was so far away from being a profitable trader that I didn't think it was possible at all. However, just a few years later, I am now consistently making 6 figures per month. And with 8 trading days left this month, I am well on pace to do it once again. None of this was rocket science. I just happened to use a very effective strategy in a very effective way. So let's get into it. The goal today is to show you exactly how this strategy works. Because the beauty of it is that 1, doesn't involve fancy indicators, 2, doesn't allow you to get emotional, and 3, it does not require you to haunt the charts for 6 hours per day. In fact, this strategy works best in 2 specific 1-hour intervals, which I'll show you today. And of course, it's repeatable, even within the exact same trading session, which I will show you in my first example. And again, I want to reiterate that it is so simple that even beginners can make this work, because this does not involve a 7-step process with 6 prerequisites before you can take the exact same entry on a trade. Let me show you. Remember when I said I'm going to give you the 3 easy steps you need in order to implement this strategy yourself? Well, here are the steps. 1, find your levels, the top and bottom of the current range that price is in. 2, take entry on a firm 5-minute candle close above resistance or below support. And 3, implement an emotionless risk management system that prevents your losses from being greater than your wins. Here's the example. So on this particular day, I am looking at July 3rd. July 3rd was a little bit of a unique day because it was just prior to July 4th, of course, the American holiday of our independence, and it was a short trading day. And so we were just going to have an opportunity to trade in the morning session. And in the morning session, the best way to start off by finding your levels is to look at the pre-market price action, which is in this yellow here. Pre-market price action will very clearly find your range that you can predict will be the range for the New York session until it leaves that range. And on this particular day, the pre-market high and low, I marked at 620.53 as the low, and I marked 622.63 as our high. Once the New York session kicked off, price left that range almost immediately. And so we repeat this same process. You can see that the very first candle closed above. And so at this point, we are now trying to find our new level of resistance. So what did price do? Price came up and it ran into its first area of true selling pressure right up here at around 624.39. At that point, I marked 624.39 as our new level of resistance. What happened next? Price came up. You can't quite see it on this candle, but it actually tested and failed to close above that level and then very firmly closed above it at this candle close here. This was our first signal that price was ready to leave that new price range. So what did we do? We actually waited for a firm 5-minute candle close above resistance, which was 624.39, and we bought calls at the close here. We had a little bit of indecision at first, and then price distributed up, and we were able to sell half our position here, and then eventually got stopped here. Not a full trade, but very nice price follow through. And then we were ready to rinse and repeat again. And so at that point, we saw that price came back down. And what was interesting here is that we saw price hit another level of resistance right around here. And so we are going to mark 624.84. And you can see once price stopped us out, it did test and fail to close below that level. So we felt very confident that was going to be our new level of support for that price range. And so what did we do next? Well, you can see price also ran into some selling pressure 1, 2, 3 times, right around 625. And so once we had a firm 5-minute candle close above 625, we took entry on calls once again. And we again were able to get a nice move. It didn't quite hit our 10% on that first move. However, when price reversed, it was able to hold back on and push back up through that level and distribute well above our 10% goal. Once we hit 10% above where we entered, we sold half our position and moved our stop to break even. Price distributed even further, and we were able to get a quarter off at about 15%. And then we moved our stop loss to 10%. At that point, we were stopped out. About 3/4 of our position we were able to sell off for about a 12% gain on that trade. Now, what's interesting about this particular day is we had such an incredible push up. At any point, many traders were probably looking to say price needed to reverse at some point. And so many traders were likely looking to short the market. However, what's beautiful about this system is we don't go off of what we think will happen, we let price confirm it. And so if you watch price action, especially through this morning session, it never came back down and confirmed a close below any level that was resistance as support. And so if you look down here, price at this point did come down and test that level that was resistance as support. However, with this strategy, we knew that there had been a higher low established just below that level that was resistance now as support. And so we were able to mark that same level where this higher low was established at about 625.27. What did that do for us? Well, it allowed us to recognize that yes, price did come down and test this level, which was resistance as support, but it also had an underlying level of support very close to where this candle closed. And so we could predict that price was going to react once again to that level. And so we were able to recognize this was not a good entry for put. And so we actually stayed away from this put entry, which may have stopped out many traders. You can see at any given point when price did change direction, it did not fully commit its way back down. However, if you look at the top of the price action right up here, you'll notice that something different happened. And that is this. It did retrace, find a low right about here, created a lower high, and then close below and found another level of underlying support right about here at 625.73. The difference between these first initial moves of selling pressure and this one is that price found a structural change in its direction. What do I mean by that? Well, you can see each time that price retraced, it found a higher low and pushed up, found a higher low and pushed up, found a higher low and pushed up, all the way through here. What happened up here was that it retraced, found a higher low, pushed back up, created what's called a lower high, and then found a lower low. Price structure actually shifted at that point. What do we look for then? At that point, that truly becomes underlying support. And when this last candle did test and close below underlying support, the signal for a true reversal, and that's when price completely dropped, a true reversal instead of a retracement. So if you have interest in learning more about retracements versus reversal, please click the link below. You'll be able to follow along with me every single day. Now, on to the very extra special example. I'm glad you waited. Flashback to last month, in particular, June 12th. Now, this is an extra special day for me because it happens to be my birthday. We actually see a pretty similar setup as to the July 3rd example, in that we marked the pre-market price range, found pre-market high, but left that pre-market range pretty early in the session before our ideal trading window, which is about 10 a.m. to 11 a.m. Eastern. And so we were able to repeat this process of finding our new levels. And if you see, once price left pre-market range, it found a new level of selling pressure or resistance at about 601.03. And price tested and failed to close above that level, reconfirming that upper level of resistance. So next, we wait for a firm 5-minute candle close above resistance and take entry on calls. And then we implement the risk management system, which is, once again, once you take entry, you set your automatic stop 10% below, and you wait for price to either get stopped out, which you hope it doesn't happen, or for price to move 10% in your favor, in which you will sell half your position, move your stop up to break even. And then if price moves even further to 15% above your entry, you take a quarter position off and move your stop to 10%. Now, traditionally, the next step in that risk management system is for price to wait until it hits 20% and you sell that last quarter position. In my last video, I talked about how you can do minor tweaks to allow that percent on each trade to go even further. And here's one way you can do it. If price is moving very favorably in your direction, you can do one extra step, and that is to put in a trailing stop. How that works is that when you sell your third quarter of your position, you keep your stop loss a little bit below 10%, still in a profitable place. But when price moves to 20%, you move your stop to 15. If price moves to 25%, you move your stop to 20, and you keep that trailer in. And sometimes you can squeeze that last quarter into a much higher percent gain. Much like today. Once we had a firm 5-minute candle close above resistance, look what price did. So we were able to squeeze our trailing stop all the way up to right about here and then get stopped. And that last quarter we sold above a 30% gain. And it was an extra special day, not only because it was my birthday, not only because I got more than a full trade, but because of one other thing. Let me show you. I actually didn't take this trade from the comfort of my home. You can see June 12th, right here. I was with my family at Disney World. And once we got into the park, I snapped this picture right about 8:52. What happened next? Well, my son wanted to go to Space Mountain. My daughter was too short for it. And she loves carousels. And so she said, Daddy, take me on the carousel. And I look to my right and I see this sign, Carousel of Progress. Okay, that sounds good. It was about 95 degrees and about 99% humidity, so I was looking to get out of the heat anyway. However, this wasn't your traditional carousel. It kind of looked like this, like a little bit of a movie theater, and it was cool, which is great, but all it was this odd-looking mannequin talking to you about the history of Disney. Within 30 seconds, both my daughter and I were bored to tears, and we were ready to leave. But we couldn't. We were locked in there for 20 minutes. And so once I realized that, I looked down at my phone. It was almost 10 a.m., almost the ideal trading window. I pulled up my phone, I saw those levels, and I took the trade on a ride at Disney World. And it wasn't just some ordinary trade. It actually made me over $11,000. And so even though my son and my wife got to go on Space Mountain, I had the bigger smile. If you got a lot of value out of this video, please click the link below. Follow me every single day on my trades. More content coming every single week. Please leave a comment on what you like so far and what you'd like to see. See you next time.